Well, the first company to report its numbers, Alcoa, didn't disappoint. The company earned 18 cents a share. That excludes special accounting items, and it was a beat of 6 cents a share. Revenues also easily whipped Wall Street estimates. Management says global aluminum demand will grow 7% this year. Shares moved initially higher in after-hours trading. That strong second quarter at Alcoa reflects a new strategy by the Pittsburgh-based metals giant as it transitions from a commodity provider to a product maker for the auto and aerospace industries. Morgan Brennan has more.
Alcoa's quarterly earnings shed light on a much bigger story: the company's ongoing fundamental shift from a pure aluminum producer to an industrial manufacturer.
It's a strong quarter. Transformation is in high gear. You see our value-add business now makes up roughly 59% of the revenues, but almost 70% of the profits.
Alcoa has been concentrating more on producing parts for airplanes, autos, heavy trucks, gas turbines, and building supplies, forging them from aluminum, but also nickel and titanium. It's a stark transition from just 3 years ago, when global aluminum prices were tumbling amid tepid demand and overproduction in China. That forced Alcoa to cut back on its mining and smelting operations and focus increasingly on finished products, a higher margin business that could benefit from lower commodity costs. Since then, Alcoa has forged partnerships with automakers for aluminum-based panels, rolled out expansion plans at several aerospace-related facilities, and last month announced the acquisition of jet engine parts maker Firth Rixson for nearly $3 billion.
We really think the next leg of the story is actually aerospace, and the Firth acquisition last week really highlights what Alcoa can truly put together.
So far, the strategy seems to be working. Despite being booted from the Dow Industrial Average, the stock has climbed dramatically over the past year, as products have accounted for more and more of Alcoa's revenue.
The value-added business, of which the aerospace is a component, went from 43% of operating income to 80%. So when you talk about a transformation in the company, that's already taken place. And then with the stabilization on the commodity side of the business, any upside from there is just icing on the cake.
But there are headwinds. Alcoa faces increased competition from other aluminum producers, as well as steel makers, in the auto industry. And despite diversification, aluminum prices do continue to weigh on the company's mining and smelting businesses. For Nightly Business Report, I'm Morgan Brennan.